Today, we are going to be covering checkbook control, some issues and some recent compliance issues that have come up. So buckle in, and it's going to be a good one today. One moment. My name is Alex Perny. I've been with Advanta since 2012. I'm a certified IRA services professional. I really look forward to bringing you some good new information with regard to some current court cases that have directly had some impact on checkbook control IRA structures here. And I also have with me my colleague Scott Maurer.
Hey Alex, glad to be a part of the event today. And my background, I've been with the company since 2006. I am a licensed attorney, although you'll see on the next slide, we don't do any legal or tax advice for our clients. Although we're certainly going to talk about, especially with the checkbook control today, not only the recent court decision that impacts some of the things you can or can't do with your checkbook LLC, but we're also going to talk kind of about the structure and how you actually get one started, somewhat from a legal perspective. So. Both of our contact information is on this slide. So if you have any questions, obviously during the webinar, type your question into the question box. But if you want to reach us outside of the webinar afterwards, please jot down this information and reach out to either Alex or myself with any questions that you have.
Yeah, thanks, Scott. Yep, we'll certainly make sure this is also up at the end of it as well if you want to snag it. And especially important today, just understand that Advanta IRA and our employees, we do not provide investment or tax advice or endorse any products. All informational and materials are for educational purposes only. All parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. So just important to note that while we certainly will be covering some legal aspects today, you really should make sure that you consult with a qualified CPA or an attorney on getting any advice on your particular situations. About Advanta IRA, we're a self-directed retirement plan administrator serving clients nationwide. We strive to provide excellent service with our account manager program, and our experience and knowledge is paramount in administering self-directed IRAs, especially with all of the different caveats that go into all the different types of investing you can do with these accounts, which we'll get into in a little bit. A little bit about us. We have almost over 20 years of industry experience, and well over that with combined of all of our employees. We utilize strictly FDIC covered accounts for any cash that you hold with us, and we're very proud that we now administer over $2.1 billion of assets under management and administration. So we are very grateful for our clients, if you are on the call today, and non-clients that we have been able to grow our business and provide such excellent service for so many years. And another good thing to touch on is that we here at Advanta strive for excellent customer service. Every single account, whether it's a $1,000 account or $1 million plus, gets the same great level of concierge service with our account manager program. So if you're looking to do something and you maybe haven't had experience in self-direction, or this is all kind of new to you, or you're well experienced and need to do stuff that is very unique and bespoke to your particular type of investment structure, we can certainly handle that and give the great service that you really need for those kind of investments. What is a self-directed IRA? Coming into this, if you aren't familiar, really it's anything, we handle really anything that is not on a tradable securities market. So if you want to basically do anything that is outside the scope of a broker dealer's purview, that's what we handle. A lot of what we do here centers on giving clients a lot more control and targeted focus on alternative assets. And again, alternative assets really being anything that's not a security. So what are those? What kind of things does that include? Well, a large portion of what we administer for clients is real estate related. So the large umbrella when you think of real estate investing is a lot of what our clients do. So buying actual deeded real estate, buying a single family home, a duplex, multifamily real estate, people that don't want to actually buy the real estate but hold paper and hold the actual secured interest on a property, we do that as well. Also investing in private startup companies or private placements, private bank stock, things like that are a very key interest to clients. And especially right now with the high rising inflation, just on our podcast earlier covered what we're seeing. We're seeing a 10% increase over last year in consumer pricing indexes. That really kind of leads itself into precious metals being a very popular investment structure right now for IRA clients, and even more importantly to the court case that we're going to cover with Commissioner v. McNulty, or McNulty v. Commissioner, later on in this presentation, of the specifics that you need to really focus on if you want to invest in precious metals, because there is certainly a right way to do it and absolutely a wrong way as well foreign currency, futures trading, and really a lot more kind of goes into this with regard to what is a self-directed IRA and what you can really do with these accounts. So while this is certainly a short list, it is certainly much longer and much more in depth. And if you have any questions regarding a particular type of investment that you might be looking to do, type that into the chat box. We'd love to hear from you and really love to take the time to look at that and maybe help some other people out in what they're looking to do as well. Now, a lot of people haven't necessarily heard of checkbook control. While it is definitely a popular method of investing with self-directed IRAs, the majority of our clients don't use any other type of secondary structure to invest their funds. They roll over or transfer funds from another IRA custodian or old 401k, and they just buy the assets directly. Now, there may be a multitude of different reasons that you would like to utilize something with tighter control, so we'll certainly get into that. They have definitely gained in popularity in recent years in the investment structure of utilizing a secondary entity and checkbook control being more popular. The reason is that an IRA client can take tighter control of their IRA by establishing an LLC or a trust that will act as a conduit for their IRA funds. So the IRA in this scenario buying the interest in either of these types of entities, and then the client being able to more tightly control and direct those funds into their particular investment can definitely be a benefit depending on what you're doing. While it's not necessarily a cure-all for all types of issues that you might have in investing, especially in things that have time sensitivity or high volumes of purchases and sales, it definitely is a useful tool to have in your arsenal and understanding that as well. But the key importance is doing things correctly. Just like with anything in life, just to do something is kind of only part of the equation. Doing it correctly and in a manner that is attainable and also for the long-term compliant with particular laws or structures that you're looking to use is very important. And again, if you haven't heard about this, it's not inherently something that is new or cutting edge in most regards. It's just not something that is as well known. 4% of roughly all retirement plans are self-directed, and an even smaller percentage of that are clients that use self-direction with checkbook control. So it's just something that is definitely more of a unique use case, and we'll certainly elaborate more on how it works and some things that you need to watch out for here a little bit later on in the presentation as well. Now, self-direction, again, is really just in reference to the type of investing you're doing. It's not specific to the type of an account as a preclusion for being able to do this. Any of the types of accounts that we have listed up here can be self-directed and can also be utilized with checkbook control. I've heard a lot in my experience, and I'm sure Scott would concur, is that people come to us and say, oh, I thought I needed to have a Roth IRA, or I can only do this with a solo 401k. It's absolutely not the case. If you have a traditional IRA, maybe you had old 401ks that you had rolled over from old employers and it's just sitting at a broker in a traditional IRA, you can absolutely self-direct that. If you have a Roth IRA, even better. Those are fantastic accounts to use. They can also be used with self-direction and checkbook control. Things like small employer plans like the SEP IRA, which allows you to defer a portion of your compensation up to 25%, can also be self-directed and checkbook control. Simple IRAs, while certainly not as common in the market today, definitely still have their place. Those can be utilized in this type of investment structure as well as Coverdell's, health savings accounts, and solo 401ks. All of these account types can be used in conjunction together as a combination partnership, can be used individually. There's a lot of different ways to kind of use these in self-direction and more specifically with checkbook control to really help you supercharge your retirement investment structures and the way that you go forward in making the best decisions possible and taking back that control. So just understand that traditional Roth, SEP, simple, Coverdell ESAs, health savings accounts, solo 401ks can all be self-directed. It's not just specific to one type of account that you can use.
Yeah, and Alex, I would jump in on that too and just say as well, don't forget about the old employer plans as well. Any old 401ks, old 403b plans, thrift savings plans. If you worked for an employer and you're no longer working for them, whether you're you retired, you quit, you were laid off, whatever the case may be, those old employer plans can also be rolled over and be self-directed. So about the only restriction there is on retirement funds are your current employer. If you're working for a company currently, they may place restrictions on your ability to move money. So as Alex mentioned, there's a lot of different types of accounts that you have access to and to place in these types of investments that we're talking about today.
Yeah, and to piggyback on what Scott said, that's a great point to bring up. I still hear from clients from time to time regarding the CARES Act, which was the large piece of COVID prop legislation that tried to help, charge the economy through the very difficult times in 2020. There were provisions in there that would allow people to withdraw and roll over funds from employer plans while they were still employed. All those provisions have since expired in the middle of last year. So if you are still currently working for an employer, that is the one carve out that is going to restrict you from moving funds out of that plan if you're under the age of 59 and a half. But if you no longer work for the government with a thrift savings plan, if you were in the armed forces, if you work for a nonprofit and had a 403B and no longer work for that nonprofit, all of those other types of employer plans, if you no longer work for them, can all be rolled over into a self-directed IRA for this type of investing. And to kind of really nicely segue into this slide, moving funds from these old plans or from any plan to a self-directed IRA, while not necessarily a complicated transaction to accomplish, there are very specific things that will go into it to make your life significantly easier. The first thing I like to point out is really the overuse of the term rollover. Now, rollover is a very specific term used for moving funds from one retirement plan to another, but when you do a rollover, it is actually a reportable event. There's a 1099 generated, and through the reporting on the distributing side and the receiving side, will offset any taxable liability. What I really like to convey to people is that if you have an existing IRA, whether it's a Roth, traditional, SEP, simple, anything that has the moniker of IRA attached to it, please do it as a custodial transfer. This process is when you open an account here at Advanta and we request via a form that we fax to the other custodian to pull those funds out of that account. This type of movement is non-taxable, it is non-reportable, and you can do it an unlimited amount of times in a given year. Now, if you do a rollover, those do have to be used from old employer plans to IRAs. There is a 1099 generated and a 5498, which is the corresponding report from us to say it's non-taxable, which is a long kind of complicated way of saying only use rollovers when you have to. If you have an IRA, it is more often not going to be a detriment to you and potentially have tax reporting issues if you request a rollover distribution. Let us take care of the work for it. Let us make sure that it's non-taxable and non-reportable. It's going to make your life a lot easier. That's just a little bit of a caveat I always like to put in this is that there's a difference between moving money between these different types of an account, and the easiest way for you to do it, contact us. Let us walk you through the steps. Let us make it as easy as possible for you. With that said, that's all well and good to get the good basis for what kind of accounts can be self-directed, what kind of accounts you can use checkbook control with. Now let's really get into why you're here. Why do people use checkbook control? What is this stuff and why does it matter? Well, checkbook control is really a tool for offering clients more control and tighter administrative capability for their IRA funds. So it can offer the client direct access to write checks from the account. It can allow you to participate in things that are inherently administratively infeasible for us to do directly as the IRA administrator and custodian. A big example is if you want to buy properties at auction. A lot of people that like to do this, and if you've ever done it, understand that you might have to write a check that same day for a property to be purchased. And sometimes if that let's say that county is nowhere near where we're located in Florida, it's just impossible for us to get a check there in time. So having checkbook control where you can physically drive up, write a check, buy something at a point of sale is a very big benefit to using this type of structure. So that kind of immediate discretion, the ability to sign contracts at off hours. We have a lot of clients that attend networking events and real estate seminars. And if you meet someone over lunch and you want to sign a contract for a piece of property, you can do that on a Saturday morning, or you can do that on a Thursday evening networking event. So that kind of flexibility is one of the big draws to doing checkbook control. Now, clients that also maybe want to invest in a lot of different, maybe smaller deals, or maybe they have a lot of money and just want to invest in a lot of deals in general, the ability to reduce your fees is another big draw for checkbook control. So you can purchase potentially more assets without increasing your IRA administrative costs by utilizing a checkbook control structure. Now, one thing I would point out is that while yes, our administrative fees can be essentially capped and you have a very low cost basis for using the account with checkbook control, you also have to understand that there are additional expenses in doing checkbook control that will have to be amortized to make sure that it's a good financial fit. You're going to have to pay for an operating agreement to be drafted. You're going to have an additional state licensing fee that has to be paid for the LLC on an annual basis if you use an LLC. And if you have a multi-member LLC, you might also have to file a federal return while not necessarily having to pay any taxes. These are all things to consider when looking at this from a very pragmatic approach of saying, hey, am I really reducing my fees? Am I getting all the benefit out of it? But the potential to reduce your fees is definitely there. And again, the great flexibility in this, things like auctions, especially very popular with our clients that want to invest in things like cryptocurrency, allowing you to interface with a greater variety of exchange platforms that may not necessarily interface directly with IRAs. These are all great reasons. So that tighter control, potential reduction in fees, and the high degree of flexibility are three of the main reasons why people choose to utilize checkbook control. So checkbook control within an IRA. The basic fundamentals to understand is that with a regular self-directed IRA, if you want to make an investment, the administrator retains all the uninvested cash, we pay all the bills, and we actually fund any type of closing or purchase. So there is a back and forth between you and the administrator in this case. Now, we try to reduce any type of administrative roadblocks with this by having our dedicated account manager program. So you always call the same person, whether you're buying into a piece of multifamily real estate, whether you're buying a single piece of single family property, precious metals, auction properties, notes, what have you, you always have the same person to go to. We try to get back to every single person same day with everything that is received for our communications, and all transactions are funded within 48 hours of documents being received in good order. So while it's not necessarily a extremely cumbersome process, there is definitely a trade-off for that speed and flexibility of a checkbook control IRA versus just a regular administrator account. And we'll also get into some of those trade-offs and what they actually look like for the client. But to understand that if you do things directly with us, there's a back and forth. There definitely is a potential for there to be a time penalty on how fast things are done because you're not directly writing everything yourself and doing things directly as, let's say, a manager or directing a trustee with a trust account. Now, with a checkbook control account, you personally obtain control over the cash in the IRA using that third-party bank account, the business checking account that's opened up for the LLC. And then the client is able to issue payments directly out of the account, able to receive income and deposit income into that third-party bank account. Definitely a key aspect of that last bullet point is to make sure that if you're receiving the income, it's written to the name of that LLC. That's a very important thing to understand, is that if you own a property, that it's not written to John Smith personally for the rental income, it's written to Sunshine LLC. That is the LLC being used in conjunction with this checkbook control. Let's see, we have a question that just came up. Single family home property, for example, Advanta IRA services for the benefit of client and account would be actually on the deed. It's the titled owner of that. So you have the clear delineation of John Smith's IRA is on the title to this piece of property. Now, you have to have that kind of that custodial relationship. In a checkbook control scenario, the IRA still, through the chain of custody, holds title to whatever assets are held because the IRA owns the LLC. So you still have to maintain that clear administrator custodial relationship, but in the sense of checkbook control, it is a little bit farther removed. You just have to look at it stepping back a little bit, but you absolutely still have to have an administrator in this scenario. And Scott, I'll let you maybe take this next one from Nadal. Can you read that question right there?
Sure, yes. Well, the question is, what are the tax implications and specifically the tax reporting implications of setting up an LLC to oversee checkbook control? We'll touch on it a little bit more later when we talk about getting a tax ID number for the LLC. But in most cases, when you have, as Alex is describing, you're setting up the LLC, it's typically the checkbook control is set up with just one IRA account as the member. So the LLC is a single member entity. And as a single member entity, the LLC is disregarded from a tax perspective. So there actually is no tax filing whatsoever. And I know they followed up and said specifically for what tax implications for your personal tax return. The answer is nothing. What you do inside the checkbook control structure, and even inside your IRA in general, has no impact on your personal tax return when it comes to the investing. So there's no tax implications for setting up the checkbook control, just as there would be no tax implications from simply investing your IRA through a custodian directly. So hopefully that answers your question.
Great, and I'll tackle this one from Andrew really quick. Currently has a self-directed IRA. Can they transfer from another Roth IRA to Advanta into that existing LLC? Well, if it's a single member LLC that the Roth IRA owns outright, there's going to be no effectual change in membership percentage, so we will allow for that to happen. There can be issues if you have, let's say, a traditional and a Roth invested into an LLC where a capital contribution would inflate or deflate a percentage of ownership between the two IRAs. So that is something to keep in mind. So if it's a single member LLC, capital contributions are something that we will allow clients to do. And then with regard to purchasing properties, properties don't have to be purchased outright. You can obtain financing for purchasing properties within an IRA. We'll get into that just a touch, but the big thing that you need to look at is that it has to be non-recourse financing, and it has to be directly to the LLC in this case if you are purchasing through an LLC. So you need to obtain the correct type of financing, and there might be some potential for a tax liability to be paid as well, which I'll touch on in a slide here in a moment. And regarding investing into a subsequent LLC for management of the property, it's really your decision on how you structure and layer that stuff. So if you wanted to use another tertiary LLC underneath of it to hold title and manage property, that's your discretion. You just have to, obviously understand that there's some additional costs that might have to absorb by the IRA in that case for, setting up an additional LLC, state registration fees, operating agreements, X, Y, and Z. So everything you said can certainly be done, just a matter of making sure you do it correctly. I'd always encourage you to give us a call. So I see a few more questions rolling in. Let's get through a few more slides so we make sure that we cover everything we need to in the time, and we will certainly touch base again. All right. So pros and cons of using a checkbook control structure. So we've had to touch on this, but just to make sure we really hammer it home, the pros: quick access to IRA funds for auctions. Potentially, you can hold more assets in the IRA with lower fees. In some cases, you do have the aspect of possible asset protection. What I really want to hammer home with people is that it is incredibly important to check with an attorney local to where you're actually buying property to see what that particular state's regulations are on asset protection with maybe a single member LLC versus a multi-member partnership. Very important to understand that if you are going into this with the asset protection in mind, you may not be getting as much as you think, or you might be getting all of it. So incredibly important, if from an asset protection standpoint, to really check with a local expert on making sure that that is something that is being achieved with this. You can make easier investments with partners, and you can hold a lot of different things within the same entity as well. So definitely a big bonus there. Some cons to this, because we like to focus a lot on the benefits, but there definitely is a trade-off with doing checkbook control. If you do checkbook control, you're responsible for keeping all accurate records. Since we as the custodian and the administrator are funding a secondary entity that we are not directly and administrative control over, you as the manager have to make sure that you keep records of any expenses, any purchases, because if there were to be an IRS audit, it's not us providing the records of the transactional details of the account. We're just going to show a transfer from another IRA custodian or a rollover and the funding of the LLC. All subsequent transactions for buy, sells, expenses have to be maintained at the responsibility of the manager of that entity. And a con is that you have a lack of oversight from us as the administrator. While some people think of that maybe as a negative, you're losing out on, well over 100 years of financial experience from the employees at Advanta being able to look at something and just maybe catch something easily that you might miss. So again, the ease of being able to invest in a prohibited transaction, which we'll cover here in a minute, is definitely something that should be looked at when making a decision on checkbook control. Again, some pros of using things through an IRA directly. It's definitely easier to keep an arm's length from IRA funds. If you use the IRA custodian administrator directly, it's much easier to delineate that arm's length that you need to maintain for compliance purposes, you're definitely less likely to engage in a prohibited transaction, although it is still definitely possible. It's not a cure-all and it's not a guarantee against that, but it's definitely less likely. And you definitely have the robust record-keeping structure that you have with us. Of any single check we have, we'll be able to provide you with a copy of a check. We'll be able to provide you with confirmation of issuance. All records of invoices and stuff like that are things that you get utilizing the IRA directly. But definitely some of the downsides are the potential for more administrative fees for multiple assets and no ability to write checks directly for an immediate purchase. To cover a few rules that you need to understand with dealing with checkbook control and IRAs in general, there's certain people that you can't directly deal with. And this is not going to be alleviated by utilizing checkbook control. Checkbook control just changes the administrative structure, not the compliance structure of an IRA. So there's certain people you can't deal with. And for people that aren't looking at the slide right now, think about the people you can't deal with of your family tree and looking directly up and down. So the IRA owner and your spouse, any lineal ascendant, so parents, grandparents, great-grandparents, and descendants of yourself, so children, grandchildren, or any beneficiary of your account or any owner of a business entity owned or controlled by one of the above is going to be disqualified from you directly dealing with on a transactional basis. So if you're on opposite sides of the closing table, buying and selling to that person, not allowed. You can partner with these people, and we definitely have education that goes along with how to partner, but just keep in mind, can't directly buy or sell anything from these people. And to get a little bit farther into some things that you can't invest in, again, remember, checkbook control does not change the rules on what you can invest in. It just changes administratively what you can do. You cannot buy life insurance. You directly buy a life insurance policy. Collectible items such as antiques, rare bottles of wine, artwork stamps, rare coins, not necessarily bullion coins, which we'll get into in a moment. There are prohibited transactions. So again, those people you can't deal with. And then you also have issues with what are called unrelated business income tax and unrelated debt finance income tax. As Andrew had asked previously, can you get financing for an IRA on property? Yes, you absolutely can, but you would be subjecting the IRA potentially to a taxable liability falling under the unrelated debt finance income portion of the internal playing field tax assessed by the IRS to say, hey, you have this tax shelter that you're artificially inflating with financing. You need to pay a tax on the spread of the income derived from the finance portion of the purchase. I know that's a mouthful. It is not something that is uncomplicated. Happy to answer your questions on that, but just understand if you want to finance a property purchase or a purchase of anything really in an IRA, you might have to pay a tax on that. Now, a cool aspect just to really touch on, if you use a solo 401k for the purchase of real estate or real estate related investment, you don't have to pay that finance tax. So just keep that in mind, when looking at that.
And Alex, we had a couple of quick questions pop up. I figured
Yeah.
maybe just address it or talk about prohibited transactions. So someone asked, is my brother disqualified? And the answer is no. People out to the sides of your lineal tree, it's only directly up and down, your parents and grandparents, your kids and grandkids. So brothers, sisters, aunts and uncles are not disqualified. Somebody else asked about stepchildren. And the issue with stepchildren is a little dicier because certainly if you've adopted them, then no, they would be prohibited as a disqualified person. If you haven't adopted them, it could still be prohibited because your spouse, for example, could be getting a benefit if you're doing a transaction to help their child out, your stepchild. That could be looked at as prohibited. So you'd want to make sure you're careful with that particular instance and structuring. Even with people who are not technically disqualified, like a brother or sister, you still want to make sure you're doing your investments with them on a fair market basis.
Yeah, absolutely. And just to touch on a few other questions, just to kind of segue us well into the next portion of this, someone said encourage clients to find out ahead of time which lenders are comfortable providing non-recourse. Absolutely, non-recourse loans are not something that you're going to be able to get from your local Wells Fargo or Bank of America branch. We certainly have a book of business we can refer you out to, so I just encourage people to ask. Someone had a question regarding a self-directed IRA LLC trying to buy Bitcoin. They mentioned Coinbase. Coinbase just really is a no-go. I tell that to all my clients. It doesn't matter what you're trying to do. It's, unless you're kind of a retail investor, with a pulse, entity accounts and anything with them is really just a nightmare. I would encourage you not to go that route. If you wanted to use an IRA-owned LLC to invest in cryptocurrencies, we have a suite of companies that will do it directly without an LLC. Also, companies such as let me just think for a second, such as Binance, Kraken, Gemini will all do corporate LLC accounts. Also, FTX is another option for you to use if you want to use an IRA or an LLC. So there definitely are options out there for this. Yes, the webinar will be hosted. Let's see, my LLC is made up of mine and my wife's Roth IRAs. The LLC owns and manages a single family house. What are the tax reporting implications? You need to go with a CPA on that because multi-member partnerships are required to file a federal return. Scott, do you know what the federal return form is for that?
The partnership return, I want to say it's a 1065, but don't hold me to it. But yes, you're correct. If you have a multi-member LLC, I mentioned a few minutes ago, a single member LLC does not have to file any taxes as a disregarded entity. But if you do have more than one entity, say your two accounts or your account and a spouse's account are making up this LLC, then as Alex just said, now you have a partnership for tax purposes. And even though there may be no taxes due, the IRS still requires your LLC to at least file that partnership tax return. And yeah, and you would issue a K1 in that regard to both the IRA accounts, or if you have other parties involved, K1s are issued. But again, still not taxable. It's just making sure that you, like Alex said, get with a CPA to make sure you get the proper filing. And somebody did confirm it is 1065. So that is what you would need to do.
Yeah, and there's a question regarding the single member being the manager. It's a great segue into this. It must be manager managed, and the member is not going to be the manager, meaning the IRA, so Advanta IRA, we would not be the manager of the LLC. The client can be named as the manager of the LLC, but it has to be manager managed. It's not going to be member managed. Again, the rules relating to this, it can include more than just the IRA, but ownerships are based on the initial contributions. So however much capital each member is contributing, and that can be IRAs, it can be civilian, so it can be a taxable individual mixed in with the tax sheltered IRAs going into the same LLC. So keep in mind that it doesn't just have to be standalone IRA owned LLCs. You can mix and match the different types of investors in these. Additional capital contributions are allowed, but in multi-member LLCs, you have to maintain percentages of ownership, specifically if you are involving disqualified individuals. So remember, mother, father, son, daughter, spouse, any of those people, you got to really be careful when adding additional capital into it. And if you have additional questions, we've put up 2 court cases, Swanson v. Commissioner and the tax court case of TL Ellis are good ones to look at with regard to capital contributions and management of IRA-owned LLCs. Let's see, just to go. Okay. The case study that I wanted to bring up today, specifically for additional compliance on this, and again, this is specific to buying precious metals with an IRA-owned LLC, is the McNulty v. Commissioner case. So in this case, the McNultys, a spousal couple, husband and wife, used IRA funds to create a checkbook control LLC named Green Hills LLC. They had funds rolled over from old employer plans to their current custodian, which was not Advanta. I'll just disclose that much. I won't name the actual custodian in this case, but it wasn't us. Brought over the cash to their custodian, and they directed that custodian to fund the investment into Green Hills LLC, and they wanted to purchase American Eagle coins. Now, here's where the big issue comes, is that they wanted to store them in their personal residence. And again, we're not going to get into naming people that promote this, but there are resources out there that will say that you can buy precious metals and store them personally in a safe in your house. I could not disagree with this further. When it comes to buying precious metals, utilizing a third-party storage facility is paramount, because gold or precious metal of any kind is what's called a bearer instrument, meaning that whoever holds it really holds title to that. There's no serialized number on a coin. Whoever holds it, it's almost impossible to say, hey, John Smith owns that versus Jane Smith holds it. If John Smith is holding it, they are, they are the possessor of that particular investment, and therefore they are the owner of it. So when it comes to IRS rules regarding taking improper distributions, from an IRA, if you were to pick up a gold coin, you essentially have taken that as a distribution, and it is deemed distributable and is no longer held under the auspice of that tax shelter of the IRA. Now, there's a couple different issues to look at. Remember, Green Hills LLC purchased precious metals, and then these people, the McNultys, stored them in their personal residence. So the non-issues were that the clients opened self-directed IRAs. IRS did not have an issue with that. The formation of a new multi-member LLC for their IRAs to own the checkbook control structure, again, a non-issue from the IRS's standpoint. Funding the new LLC with IRA funds and then buying precious metals with the LLC using the IRA funds, again, all non-issues in this case. The issues were based around the theory of constructive receipt of the precious metals. Constructive receipt meaning that the individual physically placed in their possession and in their hands the actual tangible indicia, the actual investment, without having any type of separation or arm's length from that investment. So the constructive receipt, and the IRS also used the term unfettered access to the IRA investment. So the act of receiving physically that metal, that bearer instrument, and the unfettered access they had to that IRA asset in their home vault was the issue that they had with this. And then also they, in the memos of the ruling, found that the lack of proper education of IRA procedures was also a contributing factor to this, because the clients stated that they did not know that this would be an issue, but when it came time to prove what education they had done, they had only simply looked at marketing that had been put out by specific companies stating that this was not an issue. And the IRS says that the ignorance of the rule, because of the lack of the education, was not a precluding factor in the other issues that they had with this. So taking in direct physical possession of an IRA-owned asset that doesn't have any clear titling to it was a big issue. Now, people will say with a checkbook control LLC, well, what about getting the deed to a property? Well, yes, an original deed, does allow you to convey something, but that deed that's recorded in public record clearly states that the owner is someone other than you as the IRA holder. So it would name, let's say, Sunshine LLC as the titled owner of that property. Just because you hold the original document doesn't convey any type of constructive receipt of that asset. Now, if you were to go live in the property, yeah, there's been court cases to state exactly that you can't directly take constructive receipt of that property, but just holding the original title to something doesn't convey any type of direct ownership interest to that. So again, the constructive receipt of the physical access and the direct unfettered access to the IRA asset are what the IRS really had issue with in this case. Again, the actual act of buying the precious metals, utilizing the checkbook control, and everything else that went into this wasn't an issue for the IRS. In this case, it was the self-storage of the IRA-owned asset by the clients that caused the McNultys to ultimately lose the tax-sheltered nature of their IRAs in this case. So it was definitely something big to come about, especially with how popular precious metals are becoming. If you want to hold precious metals and you want to do a checkbook control LLC, utilizing a third-party storage facility while additionally will increase your cost basis to holding it is really kind of the way that you need to go. Now, people certainly might like to argue that, but I think this case is a very good example of why having a third-party storage facility is very, very important. Now, we're not going to tell you necessarily who to use, but the important things to remember in this is that the storage agreement needs to be written in the name of the IRA-owned LLC. So in this case, let's say Green Hills LLC were to open up a storage account at Delaware Depository or Fidelitrade or any number of other safekeeping storage facilities and were to have held the coins there, they probably wouldn't have had a problem. Again, we can only speculate to that. That's just us looking at this objectively as an IRA custodian, but that certainly would have alleviated that constructive receipt and unfettered access to the IRA-owned assets. So definitely something important to look at with this case. Let's see if we have any questions coming out of this. So yes, we do have some interesting questions regarding this. We have, I'm lending out of my IRA. What about keeping the deed at my house? Again, don't see an issue with that because the deed is titled in the name of the LLC. You're just holding a piece of paper that proves the title is held in the name of the LLC. Doesn't convey ownership to you personally just by holding it in your hand. One interesting thing though is what about owning crypto and a hard wallet at home? So with that, yes, that is something that is a lot of people have questions about. What I would say is that if you're going to do that, making sure that you keep good, detailed, and accurate receipts. Buy a separate piece of hardware for your IRA storage of those assets, making sure that you don't ever put any personally owned crypto tokens on that particular piece of hardware. While I know things like the Nano Ledger, you can have different accounts and different logins and clearly delineate that, the last thing that you want to do is have to explain to a tax court judge the intricacies of bifurcating a cryptocurrency wallet. It's, if you've ever tried to explain, cutting edge technology to someone that is maybe older than you, or even your friends if you are, middle aged or older, sometimes you can definitely hit roadblocks with that. And having to explain that in tax court is probably not something a lot of people would do. If you want to have a little bit more information on specifically this case, I had a webinar, the Alternative Investing Advantage podcast, last week with attorney John Heyer, where we specifically just dove into this case, and cryptocurrency was something that came up. So maybe listen to that if you wanted, some more information. Now, before I turn it over to Scott, again, if people are more visual, I have the actual issues that are brought up by the case in a little bit more detail, the issues of constructive receipt, the education of the clients, and then what that also means for other types of assets. So making sure that you have clear distinction between IRA and personal assets, especially if you're doing something like crypto, making sure that you completely separate anything, or maybe even just saying, hey, if I'm doing this in an IRA, maybe using some type of hybrid online cold storage option might be a good bet for you. But again, if you're personal or if you're visual learners, kind of a larger detail of what I just discussed on the issues with the case. So now I'll turn it over to Scott to kind of take us through the ending of forming Checkbook Control LLCs. What are the different kind of working aspects of it, from setting it up to actually getting it funded? So Scott, if you want to take it over from here.
Sure, thanks, Alex. And I would go back. One of the questions somebody asked was about, say, for instance, if you're lending out of your self-directed IRA or even the checkbook LLC, and what about holding deeds or notes or mortgages? The difference between some of those assets and, in the last case with MGLT, the precious metals, is that precious metals don't have a title. You don't stamp your name or write your name on the gold coin or the gold bar. With a deed, with a promissory note, when that investment is made, it's very clearly titled in the name of your IRA or your checkbook LLC. That's what I think one of the key distinctions. I think that's what makes precious metals, and by extension some of the crypto, a little bit more difficult, and it causes the IRS more concern about it. So that's just kind of my 2 cents and watching that. So I'm going to go over, we definitely have some questions still coming in. We'll get to these. I want to make sure I get through the last part of this information, and we'll go back and hit some of those questions. So forming a checkbook LLC involves kind of a couple different steps. And a lot of this assumes maybe you already have set up the IRA account with Advanta, going through the steps that Alex outlined earlier with the transferring or rolling over from another plan into that account. But forming an LLC really, and also getting ready to fund, involves 3 steps: filing the articles, obtaining a tax ID number for your LLC, and then in turn, opening a bank account. Now, when you're filing the articles of organization, these are the documents that get filed with the state of your choosing, whichever state you wish to set your LLC up, and really only list basic information for the LLC. You list the name, the address, and the manager's name and information. Filing fees vary wildly between different states. Some of them are very low on the low end. Some of them, for instance, in California, is a $400 or $500 fee to get that filed. So sometimes choosing where your LLC is going to be located, the filing fees certainly might come into play. Once you get the articles filed with the state, which you can do online in a lot of states, you would obtain a tax ID number from the IRS website. You can either file it online or you can file by mail. You typically will need a tax ID number to get a bank account opened for your LLC. Any banks, the 2 items they want are the articles and the tax ID number. And then once you have those items, you go and you can open up a bank account. Now, typically we would say the bank of your choosing, but if you have any issues with the bank that you like to use, we can always recommend other national banks who will do checkbook LLC accounts without any issues, and they understand. So as we go to the next slide and talk a little bit more specifically about the filing of the articles, it's just some helpful tips. Again, most states, when you file, you have to give them the name of the entity. You have to include LLC or LC in the name of the particular entity. And typically as well, you have to have a different name for your LLC from any other entity located in that state. I know in Florida, for example, you can search the records and search for names to make sure your name will be available. When you are setting up checkbook control, do not include Advanta in the name of your LLC, and I recommend not including the letters IRA in the name. It doesn't make it wrong if you do, or if you choose to put your name and IRA in there. Just my personal recommendation would be to leave IRA out. Definitely do not include Advanta. Other thing with articles, and this might also go and factor into which state you choose to file your LLC in, is that every state requires you to have a person, and sometimes you can hire a company to do it, to act as a registered agent that is actually domiciled and located in the state that you're opening your LLC. So you have to have a registered agent who would receive any potential legal notices or services of process if you were to be being sued or someone was wanting to address you from a legal perspective. You have to have a registered agent in the state. So make sure if you live in Georgia and you want to set up a Wyoming LLC, well, if you don't know somebody who can act as your registered agent in Wyoming, then you're going to need to hire a company to do that work. So just keep that in mind. And again, when you're filing the articles, again, the articles are different from the operating agreement we're going to talk about in a minute, but the articles for an LLC only list the name, the addresses, and then whoever is the manager, the person who is authorized to sign documents, make decisions. And in a lot of the checkbook control LLCs for IRAs, you as the individual act as the manager of that LLC. So you may list your name. You do not want to list the IRA account anywhere on the articles that you file with the state. You only simply need to list who the manager of that entity is. Now, like I said, once you file the articles and you get that back from the state that they've been approved, the next step is to file for a tax ID number, federal EIN or TIN with the IRS. And you can do so directly on the IRS website. Use their online tutorial to go through where you get, at the end of the process, you get an EIN number then for your LLC. You will need to have the name of the entity, obviously the address, the number of members in the LLC. Again, it's important to remember a member is the owner, the manager is who is in charge. And again, with checkbook IRAs, you may just have one member. It's just your IRA account, and that is it. And then again, getting to something we talked about earlier, the taxation structure of the LLC. If it is going to be just one entity, it's just your IRA account, the taxation structure is you check kind of other in box 9A that you can see there and put in it's a single member disregarded entity, which means the LLC itself will not file any kind of tax return. If it's going to be more than one member, then by default, the tax ID number would be obtained as a partnership, which, as we talked about already, then means you're going to have to further file a tax return each year, even though no taxes will be due.
Yeah, great points. I would always on this recommend people go online. Before we jump over to the next slide, we had a really good question come over. If you list yourself as the manager authorized to sign checks, essentially the entire concept behind checkbook control, can the tax court say that the actual checkbook is unfettered control of the money, similar to having silver coins in your residence? Well, to that point, unfortunately, the court case of McNulty v. Commissioner didn't directly address that. However, one of the court cases, or a tax court memo, which was the TL Ellis case, did address that with regard to the actual utilization of the IRA owner as the manager, and the courts did not have an issue with that. Similar to you clicking sell trade on like a Fidelity account for buying securities, just the conduit of administrating the IRA funds is not an issue that the IRS has with checkbook control. Now, specifically, I'd just like to be very clear, the McNulty case didn't actually issue any opinion regarding that particular type of question, but that has been addressed by the IRS in the past. So good question. Just wanted to get that one answered before we skip over to opening the account for the LLC.
Yep, and one question too. So someone said, if I already have an LLC, do I need to create a unique LLC for Advanta, or do I just use my existing one? And what we're talking about today with checkbook control, you cannot use an existing LLC that you have if you already own, because you personally already own it. So when you're creating one for your IRA account, you would need to have a completely separate brand new LLC for your IRA account. So opening up a bank account, so once you, again, you file the articles and you receive them back from the state, you've obtained the tax ID number, you go to the bank, you take your articles, take the tax ID number to get that bank account opened. You would just want to make sure they know that you're the authorized manager and signer for the bank. And I would, if possible, not mention to the bank that the owner is your IRA account, because typically that will confuse the bankers and the people that you're working with that now think you're trying to open up an IRA account. So you can simply say, I'm the manager of this LLC. Here are my articles. Here's my tax ID number, and I'm using it for investing. You can get a debit card. You can certainly get checks, obviously issued for the LLC, but you do not want to get a credit card for the LLC. When you get a credit card, that means you are essentially borrowing money now with your LLC, where you're personally guaranteeing that loan. Even though you're going to pay that credit card off every month, getting a credit card in the name of the LLC would violate the IRS rules, because now you are personally guaranteeing debt on behalf of your IRA account. But debit cards certainly are fine, and certainly the checks as well. You can set up the bank account with any local or national bank. Again, we can help give you names of some banks that we've worked with that if you have trouble getting your local bank to understand, and make sure you're taking those precautions as well. You don't want to combine your LLC bank account with any other financial account, or move money freely back and forth. That could result in a worst case, it's a prohibited transaction in the eyes of the IRS. And next slide, Alex. So again, getting the articles, getting a tax ID number, setting up a bank account, that's kind of the functionality of eventually how you will get your funds moved. Now, the other important thing, though, that Advanta needs to see is anytime we make an investment from an IRA account, is we have to see the operating agreement for the LLC itself. So the operating agreement lays out how the LLC is going to be run. It's going to list who the members and who the owners are. Any other provisions might be included as well. But we want to see the operating agreement, because this is the documentation that your IRA account has ownership in this particular LLC. An operating agreement typically at minimum is going to include, obviously the date of the agreement, the name of the member or members if there's multiple ones, but it's going to include your IRA account, and we will give you the legal wording for that. It'll include the name of the managers. It'll mention that there's limited liability for members and managers. Typically, might talk about how you might bring new people into the LLC or actually remove people from the LLC, the taxation, et cetera. And again, maybe not all of these provisions, but typically all of these provisions would be included. And the operating agreement can be anywhere from just a few pages to 30 or 40 pages. It really just depends on who's drafting it. But that's the document that we need to see at Advanta that states exactly that your IRA account, or maybe a couple different IRA accounts, are the members of that entity.
Yeah, absolutely. And we have a question before we slip over to the next slide. So would the checkbook be managed by Advanta or the IRA client, I believe is what the individual is asking. So the checkbook is directly managed by the manager of this LLC. And as Scott just said, that is, in this case, going to be the IRA owner. So Advanta, we would just be listed as the titling as the member on this operating agreement. And the operating agreement, although it doesn't have to, it's typically good practice to state whom the manager is going to be, being the client. So in this case, with the platform that you're looking to invest with, all the checks would be written and signed for by the IRA owner / manager of this LLC. The custodian administrator, in this case be it Advanta, would not be signing anything past just as the member on the operating agreement. Everything else downstream with regard to the actions of the LLC, whether that's filing articles, whether that's doing anything else, signing checks, documents for an investment, all done by the IRA owner as the manager of the LLC account.
Yep. So and again, drafting the operating agreement, again, it can be a short document. It can be longer. Again, the key thing for Advanta is that we see that the IRA account is listed as the member, and that ultimately the operating agreement is going to be signed by us, by Advanta, on behalf of the IRA, and it's probably going to also be signed by the manager. There's certainly a number of other provisions you could include. Again, and we're kind of given this information, the perspective of somebody looking to do some of this themselves. There is no prohibition on you creating the LLC and providing us with the operating agreement if you're so inclined. If this looks a little too daunting, we certainly can refer you to an attorney or a CPA or someone who could help you with this aspect of forming the LLC. So just quickly go through the kind of what the steps look like before we jump in and answer the rest of these questions. For someone who's looking to start the Checkbook LLC, we have Joe, who's got money in his brokerage account, wants to invest in real estate, wants to buy properties at auction. Maybe he wants to hold a brokerage account and have it everything just in very close to him and easy to use. So he's going to use the checkbook structure that's going to allow him to make all those investments in one place. First step for Joe, completing the paperwork to open up the IRA account and directing us to request a transfer from his existing brokerage account. We'll have an account number for him in less than 24 hours. We'll send the request to his other custodian for the transfer of assets. Again, the next step, as we've talked about already, Joe needs to form an LLC, choose a state, choose a name for his LLC, so basically form and file those articles with the state that he wants to set up that LLC in. So do it online, do it through paper, however he chooses, or again, use a legal or tax service as well. The next step for Joe, once he gets that LLC created, is to start working on the operating agreement. Again, we will give him the legal wording for his IRA account, and you can see it in the last box there on the screen. The IRA as a member needs to be listed as Advanta IRA for benefit of, or FBO, Joe Smith's IRA and his account number. That's the wording we would give to Joe when he's setting up the operating agreement. Again, he's going to get his tax ID number, and he's going to forward the operating agreement to Advanta to sign it on behalf of his IRA, and then we will sign the operating agreement. And when Joe provides us with the bank information, we will issue a check, send a wire from the IRA to fund ultimately the LLC. Joe opens up so from that standpoint going forward, Advanta is somewhat out of the picture. Joe, as manager of the LLC, can enter into contracts to buy the real estate. He can open up different types of brokerage accounts if he wish. He could buy properties at auction. And he's going to sign and execute all documents on behalf of his LLC in his position as manager. So the funds will leave the LLC account, bank account at Joe's direction to make the investments. Any income that's generated comes back into that LLC account as well. So Joe's going to operate the LLC, and again, not want to commingle any outside money that wasn't there at the outset. I know one question we got asked is, if I have an LLC, say with my IRA, my spouse's IRA, and some personal funds, can I do that? And the answer is you can, and you can put all three members into the LLC at one time and indicate the percentages of ownership, but you can't change any of that going forward. So if you had, say, your IRA, your spouse's IRA, and you personally each own 1/3 of the LLC, then all income that's being generated is coming back and ultimately will be split between the three parties on that percentage basis, and any expenses that get paid out of the LLC account are basically being paid on that same percentage basis. But you cannot change the ownership percentages once you set them out. When you first set up the LLC, if you were working with a partner, you establish that percentage at the outset, and that's the percentage that needs to stay static throughout the life of the LLC. And I think that it kind of ends our prepared remarks. I know we have some other questions that have come in. We have a few minutes left. I want to make sure that we get to those. If we don't get to your question, though, here's Alex has put up the slide. Here's our contact information if you want to reach out to one of us on an individual basis. So one question just came. Some questions have an LLC account application asking about their financing activities. Is this more for an attorney to address? They're basically trying to find out what the LLC is being established for. I think on those banks, you can simply tell them it's for holding investments. I don't know that you need to be more specific than that with the bank, unless they ask you, say, I'm buying real estate, or I'm using this LLC to hold different types of assets. I wouldn't think they would need more information than that. If they are, then maybe look for another bank if that's a little too much more information than you want to give out. We will send a copy. We can definitely send a copy of the slides to everyone who is listening today. So we will get those out to you if you asked. Someone asked, would it be advised or ill-advised to set up two separate checking accounts under the LLC? Bank of America offer the possibility of setting up two different accounts. You can. So we have had clients, and I think this is one of the other benefits that the LLC offers. You could set up, say, a primary checking account, say with Bank of America, and if you needed another bank account in another state or for whatever other reason, as long as you're setting up all of those accounts underneath the name of the LLC, you can certainly do so. Again, the one thing you just want to be careful of is that you don't ever bring any non-LLC money into any of those accounts that you set up. So we've had clients who've set up a bank account for their LLC. We funded it. Then they used that LLC bank account to buy real estate. They set up a brokerage account in the name of their LLC, and they kind of had all their assets in one place. But so it is possible. I wouldn't say it's either advised or ill-advised. It's just your preference. Just make sure that if you're doing that, that you make sure you don't commingle any personal funds into those particular LLC bank accounts.
Yeah, good point. Another question we have is, do I have to file a tax return if the LLC is single member checkbook control LLC? Well, it's not as simple as a yes or no answer. Certain actions by an LLC do require a tax return to be filed in the context of it being owned by a tax shelter. Namely, if you are financing the purchase of something, or if that LLC, let's say, buys an active trader business. So if the LLC, let's say, purchased a laundromat, for instance, that would be a specific use case where, yeah, you might need to file a tax return. But if the IRA is buying cash, a piece of single family real estate, then typically no. But again, it's always good to check with a tax preparer in the particular state that you're operating the LLC in to see if there's any specific caveats where you might need to file something past just your annual registration with that state. But again, it's always going to depend kind of on what you're doing. But in most cases, no, you're not going to have to file a tax return. But in any LLC's case, you do have to file at least some type of annual report with the particular state that it's registered in. Now, to segue into another question, it says, can I pay my annual corporate fees from my personal account, or do I have to pay those from IRA funds? Those need to be paid from IRA funds. So utilizing the LLC monies to pay an annual state registration cost or anything else like that, that's an expense related to the IRA owned asset, in this case, the LLC. So you do need to pay those from IRA funds and the LLC. So definitely good to make sure, again, when we're talking about segregation and no commingling of personal funds or things like that, that you're not footing the bill personally for an IRA owned asset fee, such as an annual registration cost with that particular state.
Yeah,
However,
does it piggyback on that, Alex? Somebody just asked too, can I pay Advanta's fees with personal funds? The answer is yes. You could pay our Advanta's record keeping fees with personal money, but yeah, as Alex said, the LLC, any fees for the LLC that you've paid like to the state, which should be paid by the LLC account.
Yeah, absolutely. So I think that kind of brings us right up on the end of the presentation. One last question: what about funds to form the LLC? In a perfect scenario, you do need to pay those from IRA funds. What I tell clients is like, okay, what's kind of a chicken and the egg scenario is to talk to the preparer that's going to be drafting the operating agreement and just say, hey, here's the regulatory issues around this, and anyone that's done this before, would be familiar. But let's say you're dealing with someone who hasn't done one for an IRA, just say, hey, you need to invoice the LLC, and then Advanta can either pay that invoice when the funds arrive there with a bill payment and pay from the IRA funds, or once the funds have been transferred to the LLC can write a check. But you really shouldn't be paying that personally. The IRA funds need to be used to pay it, and whether we issue a bill payment from the IRA funds or the LLC writes them a check, either way is perfectly okay, but really the IRA does need to be bearing that cost of the drafting of the LLC operating agreement and any ongoing registration fees for the IRA, for the LLC as well. So,
yeah, and Alex, there was a couple of questions I did want to make sure we got to if we have just another minute or two
sure.
that come in. Someone asked about if I was looking to invest, say, on a platform like Ground Floor, or those realty shares, those different kind of crowdfunding type sites. Do I need a checkbook managed LLC to do it or not? I would say if that's all you're looking to do, you probably don't. You can just set up an account with those firms in the name of your IRA account and then do all your investing from there through your account. So I don't know that would be needed if that's the only investment you were looking to make. Someone asked about, let's see, I think it was if you have multiple members, how do you handle expenses? Well, the good thing and one of the neat things about using the LLC is if you do have 2 or 3 or 4 members in the LLC and everybody contributes their cash to the LLC account, how you handle expenses is simply that the LLC pays the bills and receives all the income. And by default, if the 3 to 4 parties all own a percentage interest, then a percentage of each income check that comes in and a percentage of each expense that goes out is received or paid for by each different member according to the percentages. So it does make it easier if you're working with multiple people to do so inside of an LLC, that so you don't have to have a tenant say send 3 different checks for a portion of a rent to the 3 different owners, or for every expense that is paid, have each person contribute a portion of that expense. The LLC allows you to kind of combine all of those in one place, and then ultimately just pay the expenses and receive the income into that particular account. So yeah, just want to make sure we got those kind of questions, those couple of questions answered. But yeah, if you had anything additional, like Alex said, you please reach out to us here at either the number or the email on this particular slide. We'll be sending out a recording of this to everyone who participated and anyone who registered. And we can certainly, like I said, include a copy of the slides, just respond back to Alex or myself. And I know some people have put in the notes that you would like us to send the slides, so we'll make sure we get those out to you as well.
Yeah, absolutely. Thank you, Scott. Thanks everyone for joining. Just keep in mind that we do host bi-weekly at least educational events such as this, webinars. They are always free. We also have every other Friday, we have our Pitch, Promote, and Prosper event, which is our open networking pitch call for people looking to actually get in and pitch deals or try to find money and get in front of investors. So that's open to everyone. It's not recorded for privacy purposes, so you can certainly attend those if you want to. And we also have our podcast, the Alternative Investing Advantage podcast. Really proud of the one that's coming out this week. We interview the CEO of a restoration and crime scene cleanup company about how to find properties that have, let's say, unique circumstances that go into them and how to properly deal with stuff and disclosure laws and things like that. So don't want to miss that. And again, last week we had an attorney on dealing with the real specific deep dives of the McNulty case as well. So if you want some more information, we have our podcast, the Alternative Investing Advantage podcast, on all podcast platforms. We have our webinars, which again are at least twice a week. And we also have our investor pitch call, Pitch, Promote, and Prosper. Any of these things can be found on our website. We also have a blog. So thank you very much, everyone, for joining. And with that, we'll let everyone get back to their day. Thanks, Scott, for being with me, and hope everyone has a great rest of their Tuesday.